Teaching an autonomous car to drive,
making infrastructure impossible to hack,
and racing towards our crypto future.
This is Beyond Innovation. Inertia can be a powerful force not just in physics, but in business. When companies grow accustomed to doing something in a particular way, it can be nearly impossible to change them for the better. It can feel like pushing a boulder up a steep hill.
The insurance industry is a prime example. The way firms underwrite applications has hardly changed in decades. But now artificial intelligence is offering a unique opportunity to break up that status quo.
Well, Cytora is one of the startups piquing the curiosity of insurance giants. It uses intelligent algorithms to gather customer data and use it to make underwriting more profitable. That's ultimately all the incentive insurers need to give the tech a try.
The insurance industry has been transformed with technology, but the underwriting process has been essentially the same for the last number of decades as insurance companies struggle with that age-old problem of how do we assess risk and how do we price risk. Your technology and your business, Richard, Cytora, is all about building a platform to help insurers increase profitability. What I'd like to understand is how does your technology actually improve underwriter profitability?
So the Cytora risk engine helps commercial insurers differentiate risk in a more granular way than they can do already, which means they select more profitable risks and set more accurate prices, which cover the future claims cost. We do this by using billions of external data points combined with the internal data of each insurance company, and we help them make better risk selection decisions as a result of the artificial intelligence.
And what has been some of the outcomes you've seen leveraging the technology?
We've been able to improve the loss ratios of our customers by always more than 5%, which translates into kind of tens of millions of profit
for
improvement.
Large insurers, hundreds.
Indeed,
of millions.
yeah. But likewise, also in terms of opening up whole new areas of growth, we've been able to allow insurers to move into new lines of business and write new premium where they have zero claims history. And this is because we use all of this data to help them differentiate risk in a better way than they could do normally.
You talk about billions of data inputs. What are some of the data sources that you typically use?
I think it's so important to build on the innovations of the industry already. So we spend a lot of time with underwriters kind of understanding what do they use today to differentiate risk. And then we find all of these pieces of information in external data sets, such as government reports, company websites, news information. But then we go far beyond that and we augment that data set. So we bring in information like, does the company have a website? Does it have spelling mistakes on the website? In terms of a commercial property, what's the weather around that property? How many days of frost can we expect to be on the ground? And what's the likelihood of someone slipping over? The advantage of artificial intelligence is the ability to acquire this data at low cost and to move from using 30 rating factors to 300. So every month we bring in new rating factors that improve and constantly improve the models bit by bit, which means we can kind of separate risks in a more granular way and ultimately find the right price for the risk. This really helps businesses as well because they get a fairer price, which is really, really important.
And one of the things that's important to insurers, of course, is keeping the cost of underwriting down. And you've had some real success in helping insurers get that net cost of actually underwriting a premium or policy down. How have you done that? We
automate the process of underwriting insurance, especially in kind of SME insurance, where the actual amount of premium is quite low. And our customers today can take 10 percentage points out of their expenses, which is really, really meaningful. Today, the industry, for every pound of premium that they write, 40% of that is pure cost of actually delivering the insurance policy.
Cost of goods sold to underwrite the policy.
Exactly. And when you break down what insurance is, it's really just a promise. And what you're doing is you're sending a check in the post and saying, great, well, unfortunately, you had this fire in your shed, here's the check to cover it. It shouldn't be that expensive. It shouldn't cost kind of hundreds of millions of pounds to kind of provide that service. We help them do that better by automating a process that today is analog and manual.
One of the things as a consumer, certainly my own experience and people I know, friends' experiences, is it's very hard sometimes to actually make a claim. Insurers need to get better and more cost-effective at the claims process themselves. Is there opportunities for your technology on the claims side of the equation?
Definitely, because every time we, with our customers, a submission comes in, we essentially score, rank, and price it. And that means when a claim comes in, 1 or 2 years' time, we already have a good idea, is this claim legitimate? Can we believe it happens? And if we do, we can pay, we can allow the insurance company to pay the claim without having to ask any questions. So insurance companies should be able to pay 80% of claims instantly. And that's what millennials want. They want instant fulfillment. That's what kind of these challenger banks are giving them today. This is what e-commerce companies are giving consumers. That's what Uber's doing in taxis. That's what we're doing in commercial insurance.
Innovation is happening right under our noses, no matter where we are in the world. Let's take a look at some of the most groundbreaking new technologies in development around the globe. You've heard the expression, if at first you don't succeed, try again. Well, an autonomous vehicle startup in the UK is taking that lesson to heart. Wave is using a technique called reinforcement learning to teach a self-driving car how to drive. The company hooked up its machine learning algorithm to a car's navigation system and let it attempt to drive. A human driver inside the vehicle would take control of it each time the algorithm started to swerve off the road. The algorithm received positive feedback when it drove correctly and negative feedback when it made a mistake. It took just 20 minutes for the system to learn how to stay in its lane. At this rate, it won't be long before Wave is putting pedal to the metal on busy city streets. From learning to drive to learning to float, we shift our attention to Germany. That's the birthplace of the International Space Station's newest companion.
Should I contact the ground station?
Meet Simon, a smiling spherical robot ingrained with artificial intelligence. Its mission to help astronauts cope with the rigors and loneliness of space travel. Simon is outfitted with IBM's Watson AI, several different facial expressions, and voice recognition software. It can also orient itself in a zero-gravity environment, so it's able to communicate with astronauts while they perform their duties. Simon will keep track of its interactions with crew members so that data scientists can learn how humans and AI work together in space. Here's hoping Simon will prove to be an out-of-this-world companion. And lastly, we land in California for some medical research that will get you thinking. Literally. It's unfortunately true that as people get older, their brains lose the ability to retain information. But researchers at Stanford University may have found a way to counteract that process. They've identified a way to block the protein that limits brain plasticity. That's the ability of neurons in the brain to form new connections. The researchers created a drug that blocked the protein receptors in the brains of both young and old mice. The treatment may one day be used to restore cognitive function in people who have lost it due to a stroke or Alzheimer's disease. And that's our wrap of the top innovations from around the world.
Coming up on Beyond Innovation, keeping the bad guys at bay. How one cybersecurity startup is making it impossible for hackers to break into some of our most valuable and vulnerable infrastructure. They say 2 heads are better than 1, and that's often the case in the technology space. Sometimes getting the most out of one solution means using it in tandem with another.
Well, artificial intelligence and blockchain make up one of those perfect pairings. AI algorithms help businesses gather and analyze customer data so they can tease out important insights. And blockchain can help those same firms secure and organize that information in a way that respects customers' privacy.
And though the technologies may work well together, it takes some technical know-how to combine them. And that knowledge isn't widely available for most companies. Instead, they turn to the experts who understand those finer details and can help them get the most out of their investments. New technology companies are taking advantage of artificial intelligence and blockchain technology to really innovate in their respective industries. And Federico, you've got London Blockchain Labs, where you're doing a combination of advisory and educational services for big enterprise customers and partners and how they can actually take advantage of blockchain technology, leveraging AI where it's possible. And Ben, Level 39 has been around for a while now, 200 plus companies. You've got a really interesting community of people that you've built, teams and communities and companies that you've built around this idea of innovating in fintech predominantly. Again, leveraging AI and blockchain. But one of the things that is most interesting about when we start talking about AI and blockchain is the availability of data and anonymized high quality data so that the machine learning algorithms can get the inputs they need to get the outputs that the target wants and also, of course, take advantage of the security and trust relationships that blockchain offers. Federico, how do you go about helping the large corporate partner realize on the new technologies?
At LBL, we mainly help them to really mitigate the risk and costs associated with exploring this technology. And I guess that one of the main trends right now is focusing on zero-knowledge proofs and homomorphic encryption, which basically allow artificial intelligence, as you were saying, to analyze the data, to operate on the data without actually having to reveal the content of the data itself. So it's a pretty powerful concept. But what happens is that there are a lot of complexities which needs to be resolved. The great thing about artificial intelligence is that you feed them, and the more data you feed them, the more they grow and the more they become efficient. But one complexity is really to understand where they can get the quality data that is needed. So, for example, the blockchain allows you put the data, and then the data is immutable and secure. But you need to make sure that the input that you have is very accurate. And so what we tell them is to use other use cases that we have been studying or that we have been actively engaged in, and advise them the best way to go ahead.
And that's a really important point, Ben, for all of your community, is getting the structured quality data as the input. You have that classic software problem of garbage in, garbage out. How do you help your community get the data they need?
We're within 5 minutes walk of 30% of the world's financial services budget holders. Now, of course, those budget holders are also very much in the organizations that hold so much of the world's financial data. But of course, they face real challenges in releasing that data, sharing that data. And I would not...
From a privacy standpoint, this is compliance, absolutely, all these issues, right?
Of course, and there's the competing tensions. On the one hand, of privacy and security and proprietary information. On the other hand, wanting to collaborate both for commercial reasons and also, for example, to improve anti-money laundering insights. So organizations like the Financial Conduct Authority in the UK play an important part, and we very much support them in this, in bringing the organizations which have essentially collected and gathered all their data inside a silos and to find appropriate ways to share that information. And of course, once that happens, early stage companies get a handle on it.
Where do you think blockchain technology goes from where we are today? Federico, there's velocity constraints, throughput constraints, people talking about the chain slowing down with too many transactions. Do you see solutions on the horizon for things like that?
Another big trend that I see is the cooperation between different technologies. So, for example, artificial intelligence can drastically reduce the amount of operations that are needed to validate certain transactions. And that creates efficiencies, for example, around the topic of energy wastages. Right. So I really see this collaboration between blockchain and other technologies to drive the industry forward.
What would each of you think the regulators should be the top considerations from a policy standpoint? What should regulators be focused on?
I guess that there is a dichotomy between understanding to what extent you want to help the little guys grow and to what extent you also want to drive innovation by allowing bigger amounts of funds to get into the industry.
Right.
And so, first of all, I will make a differentiation from industry to industry because each one has different needs. And then I will understand also that we need to be aware that it will vary hugely from government to government. So I can see more libertarian governments encouraging the growth of small players and therefore keeping it a little bit less regulated. And then in bigger countries where more regulation is needed, really to make sure that the innovations and funds are flowing from bigger companies.
I think that the regulator has to weigh two competing priorities. The one, of course, is to, and I should put this as the priority, to seek a kind of national competitive advantage, to make this a soft power, superpower environment in which highly ambitious companies like the kinds we're fortunate to host have the best possible chance of winning globally. That means they've got to be able to engage with data with as much low friction as possible. On the other hand, it's also, of course, important to consider the potential downsides of innovations in both blockchain and AI, and to address public concerns about how it might change the nature of work, how it might infringe on privacy. So essentially address both of those as a hygiene requirement, really major on creating the fantastic competitive environment we currently enjoy even better.
If you've ever struggled to look your best, you'll get a kick out of this Toronto tech. Modi Face has designed a way for you to try on countless combinations and still get out the door in minutes. The company's augmented reality app can superimpose styles atop a person's face. Lipsticks, eyeshadows, and contouring creams are no problem for its highly accurate facial tracking features, even as the user moves around. As a result, cycling between different looks to find the right one is effortless and effective. What's more, the technology is being used to examine the health of skin and recommend special treatments and moisturizers when needed.
You might think that bank accounts are the only thing at risk from hacking, but some of the juiciest targets for cyber attackers actually have nothing to do with money. They're the utilities quietly driving our daily lives in the background, such as power plants, water supplies, and telecommunications towers. When those services are compromised, it's incredibly disruptive to society as a whole. Xage is using blockchain technology to battle back against the hackers. The company sees decentralization as the key to preventing attacks in the first place and containing them when they do.
So how vulnerable is our infrastructure to cyber attacks?
You know, it's quite vulnerable today, and a lot of what's going on is that those challenges are getting more serious. We're connecting more things together. We're making it safer and more efficient. But the effect of that is to spread network connection much more broadly. And so if there is a successful attack, then the risk of it starting in one place and then spreading out is much, much greater. Number two is that we're getting more attacks. So, you know, we've seen Russian malware inside of electricity substations in the US now. We've seen attacks on oil pipelines or gas pipelines where people are demanding ransomware and other things. And then, number three is that the sophistication of the attacks is just getting much more serious, and we're seeing attacks coming in via a cell phone that somebody's attached to a substation or things of that kind. So the risks are pretty significant. The upside of the modernization of industry is significant as well, but we have to kind of balance these two things off against each other.
And so how is your solution solving that problem?
The big challenge of these more sophisticated modern systems is that everything is connected to everything else, and the weakest link of the whole system is the place where the attacker will succeed and get in. And we try and change that algebra around by saying we're going to use blockchain, and what blockchain does is that all of the components will cooperate with each other, and they will lock out a misbehaving component. So they actually have to agree amongst themselves before allowing changes to the system or allowing user access or those kind of things. So instead of having the weakest link being the problem, what happens is you add more and more components, and the system actually gets stronger and stronger as you go along.
So what actually happens, though, when you update the technology or update the actual platform itself? What kind of security measures or tools are you adding to it?
What we're able to do with the blockchain is to calculate the characteristics of all of the components that are out there centrally in a safe place, and then spread those fingerprints out across the rest of the system. And the big advantage of that is the blockchain is a tamper-proof replication mechanism. So if the fingerprint of a controller in the field, for instance, turns out to be different to what we've calculated centrally, then that controller can be protected and locked out and reset until it's safe again.
And I'm curious, though, what will it take to adopt this kind of technology compared to, say, a legacy service or security measure?
It's very variable. It depends on the particular industrial setup that you have. But one of the things we've done is to design the system so that the devices and the people can log in and can authenticate without having to change the software on all of these legacy controllers and industrial devices. What that allows is the Xage solution to be deployed almost as an overlay or protective fabric on top of the existing industrial operations.
Still ahead on Beyond Innovation, walking the gray line. We'll wade into the uncertainties surrounding the popular new way for companies to raise money and figure out how startups can stay on the right side of the law.
If there's one thing tech startups are always in the market for, it's more funding. The more cash they have on their balance sheet, the more likely they'll be to succeed.
And one of the hottest new ways for companies to raise funds is through initial coin offerings, so-called ICOs. That's when firms sell special tokens that can be used on their services in exchange for fiat currencies. While companies may love this financing tool, it treads on some murky regulatory territory.
Financial regulators have started to take a long, hard look at the nature of tokens. That's left many companies struggling to separate what's legal from what's not. Thankfully, there are advisors like Coinsilium that are reading the regulatory tea leaves and shedding light on the subject.
There's definitely a lot of action in the world of cryptocurrencies, and there's a split view on this. Is Bitcoin going to be worth $50,000 or is it going to be worth zero? No one really knows the answer, but Malcolm, you're in the middle of this firestorm of activity. There's a lot of exciting developments around cryptocurrencies. Coinsilium has an advisory business. you're doing token sales. All of this stuff needs to be regulated in some way, shape, or form. What do you think the regulatory roadmap looks like?
Regulation's coming. I think the big real question, I think, is how you actually view this sector. Is it blockchain? Is it cryptocurrencies? Where does one stop? Where does the other start? So I think the attitude towards regulation will vary depending on what lens you look at it through. So we look at everything through the lens of blockchain. Cryptocurrencies have come about because they've been enabled by this technology. We knew this was going to come along down the line. As you say, when you start going out and doing token sales and you raise on aggregate 10 billion, regulators are going to sit up and say, hang on a minute, what's going on here?
So if you set the stage there and you're in front of the regulator,
Yeah.
what's the primary messages you think they should be considering in terms of developing this framework?
We're quite close to, or we keep close to what they're doing in Gibraltar, and we sort of watch very carefully because they've, in that instance, and that's where our focus is in that jurisdiction, they're looking at building regulation from the ground up. So they're not looking at sort of what is and trying to sort of fit things into molds that aren't appropriate. They're saying they understand, or they made a point of understanding what this technology is about and what it can enable. And their regulation is built around distributed ledger. So that could be cryptocurrency exchanges, it could be companies doing token sales, anything where there's a transfer of value, not necessarily money, but a value or data may come under that regulatory framework. And with that regulatory framework, gives companies like us and our startups that we work with a lot of certainty.
When you think about utility tokens versus security tokens, the nomenclature is thrown around very loosely. What do you think the regulatory framework should look like to distinguish utility tokens from security tokens? Or are they distinguishable?
Yes, I think so, but it's only come about because tokens were just tokens when they first started, and there was no framework to actually distinguish the two. So once it became apparent that certain startups were using the issuance of a token to raise funds, and you'd look at it and say, well, it's not actually a share in the equity, but it's, what's it doing? It became a little bit disconcerting. So that's when the regulator started saying, well, hang on a minute, if it looks like a share, acts like a share, and walks like it's a share.
It's a share.
If it's backing an asset, then it's a share. So they needed to get their heads around that first. And now the process is starting to move forward. It's starting to evolve. People are looking at it more clearly. So getting back to utility, that is a sort of a sweet spot. If you can actually fit that and you can demonstrate that it is not a security under the sort of Howey test, if you like, then you've got something you can use as in utility.
Within an ecosystem.
Within an ecosystem.
Requisite members all have value associated with it.
Yeah. And we one of the most enjoyable parts of our role is actually finding that project, that startup that is actually got a really good utility. So that's what the buyers want, clear utility and a strong protocol.
Right. It'll be interesting to see what regulators decide when it comes to the token economy. There's no question that millions, if not billions of dollars are riding on the outcome.
I'm curious to see how different countries choose to set their policies. We could potentially see some new financial hotspots cropping up in unexpected places. It'll take some time for regulators to sort it all out, and that's time we're unfortunately out of on this edition of the show.
If you come across some breakthrough technology you think we should know about, let us know online. You can find us on the web, on Facebook, and on Twitter at Global Live Media.
Make sure to join us next time, and remember, the future lies just beyond innovation.